The stock market in early 2026 is standing before immense expectations, with the S&P 500 hitting the 7,000 mark and the Fed maintaining a cautious stance. Investors can easily get swept up in the herd mentality. However, a long-term investor requires a disciplined research process to separate intrinsic value from noise. Welcome back to my channel. If you're new here, please hit the subscribe and save button so you can get the most practical steps for researching stocks and helping you navigate market fluctuations without hype. My goal is to equip you with a sharp mental filter to protect your capital in a market that shows signs of being overvalued. For most people, passive index investing remains the safest path. But if you want to understand the depth of stock selection, let's begin with the first step. Step 1, screening for ideas. The research process is time-consuming, so the first step is narrowing down the list to avoid wasting resources. I use screeners based on broad yet critical criteria: revenue growth, profitability, and debt levels that remain under control. Afterward, I summarize the key financial data onto a single page to get an overview of the company's health before deciding to dive deeper. For instance, I often compare these candidates against the average returns of the VOO to ensure the research effort is truly worth it. Step 2, understanding the business model. At this stage, I place myself in the position of a business owner. I need to understand exactly how the company makes money, whether the revenue is recurring, contractual, or seasonal, and who exists within the surrounding ecosystem. I only invest in what lies within my circle of competence. If I don't understand the industry, I stop. I typically analyze using the SWOT framework and look for an economic moat, the thing that protects the business from competitors. Once I understand how the business operates, we begin working with numbers. Step 3, financial statement analysis. I analyze the 3 primary reports: the income statement, the balance sheet, and the cash flow statement. I calculate the CAGR over 5, 10, or 15 years and use the common size statements to see how expenses fluctuate relative to revenue. In Canada, I also benchmark these metrics against the standards of VDY, if it is a dividend stock. Simultaneously, I perform a peer analysis. If another name appears more attractive, I'm ready to pivot my research target immediately. And I leverage AI-driven analytical tools to parse through hundreds of pages of 10K filings in seconds to spot inconsistencies. Step 4, checking for red flags. I examine related party transactions, executive compensation structures, and any conflicts of interest. In particular, I'm cautious with adjusted figures. They aren't necessarily bad, but I need to know exactly what they added or removed to beautify that number. This is a critical step to ensure integrity before we look towards the future. Step 5, evaluating future strategy. Everything I evaluate prior to this is historical data. At this step, I want to know what management's plan is. Where do they intend to allocate capital expenditure? And will they fund growth through debt or by issuing more shares? I specifically trust companies with a track record of doing what they say they will do. I check capital efficiency through ROIC or ROE. A small tip for you: build a checklist to evaluate everything as objectively as possible. Step 6, stock valuation. This is the final step because I don't want the price to influence my judgment of quality in the previous steps. I use relative valuation and absolute valuation to forecast future cash flows. If the valuation is not attractive, I will move the stock to a watch list. Completing the fundamental research allows me to act extremely quickly when the market experiences price corrections or dips. Investing is a continuous process. Even after you have deployed capital, you must continue to monitor the stock to ensure your original investment thesis hasn't been altered by the temporary noise of the market. I hope this process assists you in your long-term investment journey. Always remain calm, rely on the data, and keep a cool head. Remember to like, save, and subscribe. I'll see you next time.